Heya Cryptozens. Tonight's show. Congress presses on the digital dollar. Tether to prove backing, and FV Bank to custody USDC. It's 10 p.m. Pacific time. The date is September 21st, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together, we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. If you have questions or comments on this show, come find us on Twitter or email us at nick@cryptoovernighter.com. And keep in mind, nothing in this show should ever be considered financial advice. There was another crypto-related legislative push again today, this time from the Democrats, and they were trying to get in a provision in a bill. They wanted the Federal Reserve to move forward on a digital dollar. It didn't end up that way, though. Instead, what they got is another federal study. You see, there's a draft bill going around, and even this draft bill wouldn't give the Fed officials the kind of authorization that they say that they're waiting on before moving forward with a central bank digital currency. That said, it looks like the federal government is sure headed in that direction. The Treasury put out 3 reports last Friday. One of those reports comes from the White House Office of Science, Technology, and Policy. They were directed to produce a report assessing the technical aspects of adopting a digital dollar. So, they're suggesting that the Federal Reserve, quote, continue its ongoing CDBC research, experimentation, and evaluation. And so they're recommending working on a digital dollar while they're waiting for authorization for a digital dollar from the White House and Congress. There's another aspect to this bill. In this draft is language that's set to make it more difficult to issue algorithmic stablecoins. In fact, they've just outlawed it for 2 years. I don't think anything is going to go anywhere with this one. It's just the timing. I don't, for one, doubt that they have the willpower to do it. So this would ban algorithmic stablecoins like Terra USD. They'd be banned for the next 2 years. In the meantime, agencies would be conducting a study of what they're calling endogenously collateralized tokens. So endogenously means that it comes from within. In this case, they mean stable coins that depend on the value of some other asset from the same creator to maintain its price. So what they're talking about are the algorithmic stablecoins. And this bill includes a grace period of 2 years. That's 2 years that they would be giving the algorithmic stablecoin providers to change their model, collateralize their loans in some other kind of way. It's clear that they're just trying to prevent another Terra Luna event. But concerns remain that the definition is just too loose, it's too wide, it's too open for interpretation. And so this bill would require Treasury to set up a study on algorithmic stablecoins. As part of this study, they would involve the Federal Reserve, the SEC, the FDIC, and the Comptroller of the Currency. I notice they don't have the Commodity Future Trading Commission in that list. Previous versions of this bill have come out with the requirements for stablecoin issuers to maintain a 1-to-1 liquid reserve for each coin in circulation, and also would limit what assets could be used to back those stablecoins. So where we're at now is that this draft bill would provide a path for banks and other financial institutions. They'd be allowed to issue stablecoins. Now, to be clear, they'd have some guidance. They'd have to work with the regulators on this one. That said, they would get state-level regulators, potentially. And this could mean a 100-day fast-track approval process to get that green light from the feds. Now, this bill has been in the works for months, and apparently it could be voted on as early as next week. Now, this has faced some delays in the past. Now, some of the concerns that held the bill up came from what Treasury Secretary Janet Yellen has sounded the alarm over. many times she brought up the Terra USD collapse. Then again, when your people lose billions of dollars like that, you tend to pay attention. One hopes. But that is part of the reason for the delay. At any rate, it is expected that lawmakers are getting ready to release the specific language. This would be the version that goes to the Financial Services Committee in a markup session, again, as early as next week. This comes to us from the same people who saw the draft version that went around earlier this week. Now, we do know that Maxine Waters and Patrick McHenry have been working to reach an agreement on this legislation. However, it's not known if the draft that's circulating now was approved by McHenry or not. This came after some testimony yesterday, and in this testimony, they heard from Ari Redbird. Redbird is TRM's lab head of legal and government affairs. It's his view that U.S. dollars-backed stablecoins could enhance U.S. national security. He said, quote, "One can imagine a world in which entrepreneurs create financial services products using a U.S. dollar-backed stablecoin, even where those products otherwise have little to do with the United States." And again, I don't expect this bill is going to make it to a vote. I certainly don't expect it to get passed anytime soon. That said, some of the concepts and some of the compromises that made it into this draft might very well appear again in a future version. One of the points of contention for Republican members of the House was setting up a role for state regulators. They'd be overseeing non-bank financial firms that issue stablecoins. One of the compromises I was talking about earlier, that states maintain their interest by keeping the states involved in regulating the non-bank token issuers. Now, those same issuers would still have to be approved by the feds as well, and that's just for non-banks. Banks are already set up. They would be supervised by their normal regulators. It was a brutal day on the markets today. At first, it looked like the market had priced in a 75 basis point bump. It looks like that assessment was wrong. The pain is not over yet. At the time of writing, the global crypto market cap is $894 billion. That's down 2.87%. The top 5 cryptos by market cap are Bitcoin down 3.12%, Ethereum down 6.87%, Tether, USDC, and Binance Coin down 0.01%. Speaking of stablecoins and collateral, Tether was in the news again today. I say again, but really it's the same case, the same one that's been ongoing since October of 2019. So here we go. Catherine Polk-Fela is a judge for the United States District Court for the Southern District of New York, and she is demanding proof. She has ordered Tether prove that it has a one-to-one backing on the Tether stablecoin. She wants them to provide, quote, general ledgers, balance sheets, income statements, cash flow statements, and profit and loss statements. See, in 2019, a group of investors got together and sued iFinex. iFinex is the parent company of Bitfinex and Tether. This suit alleges that iFinex issued unbacked Tether, and that they did so as a form of kind of market manipulation, that they were trying to drive the price of Bitcoin up by providing this unbacked Tether. And for that, they're alleging that Tether and Bitfinex caused over $1 trillion in damages to the cryptocurrency market. This followed a June 2018 report. In this report, by researchers from the University of Texas at Austin, purported to show that one large player on Bitfinex used Tether to, quote, purchase Bitcoin when prices are falling. Which seems pretty normal to me, by the dip and all that. But they say that because this guy was a large whale, and because he was using Tether tokens to buy Bitcoin, he was causing the price of Bitcoin to rebound, and then that must be market manipulation. And so this judge not only wants the ledgers, she wants the records that show crypto and stablecoin transfers by Tether, as well as the timing for the execution of those trades, and more. The order requires Tether to produce the details on their accounts at Bitfinex, Poloniex, and Bittrex. Now, Ifinex wanted this order to be blocked. They feel like they've already produced enough documents. They say that this entire process has been incredibly overboard and unduly burdensome. They've already produced documents for the CFTC and the New York Attorney General, and that should be enough. They said, quote, "We had already agreed to produce the documents sufficient to establish the reserves backing USDT, and this dispute merely concerned the scope of the documents to be produced. As always, we look forward to dispensing with the plaintiff's baseless lawsuit in due course." And more. Tether has said that revealing the composition of their reserves is commercially sensitive, that revealing that could damage their business. Judge Polkvela disagreed. She said that the plaintiff's demand for these documents was well established, that they, quote, "appear to go to one of the plaintiff's core allegations, that the defendants engaged in crypto commodities transactions using unbacked USDT, and that those transactions were strategically timed to inflate the market. Plaintiffs raised the relevance of these documents to the defendants, and the defendants' main objection was not the documents' relevance, but that the requests were overbroad." Now, they mentioned having provided this information for the New York Attorney General, and they did. In 2021, they reached a settlement of $18.5 million. In that suit, it was said that Tether lied about their reserves, and they labeled Tether a, quote, "stablecoin without stability." The end of that case saw Tether and Bitfinex no longer allowed to do business with New Yorkers. Now, Tether is saying that this isn't a big deal right now, that this is, quote, "routine discovery matter." Now, right now, Tether is saying that they have $68.15 billion in assets. This serves as collateral for $67.96 billion in assets. So they're covered. Most of these assets, they say, are either straight-up cash or commercial paper. Mistrust over Tether's finances is nothing new. In the past, Tether produced the results of audits carried out by independent accounting firms. Tether has recently increased the scope of their operations. They've established stablecoin versions of the euro, the Mexican peso, the Australian dollar, and the Chinese yuan. The global NFT market cap is down 12.42%. Sales volume is down 6.65%. According to CoinMarketCap, the top 5 NFT collections by sales volume are Mutant Apes, followed by Azuki, Cool Cats, Other Deed, and Bored Apes. Now keep in mind, some of these collections have very volatile prices, so do your own research. Sticking on the topic of stablecoins, let's shift focus to Tether's nearest competitor, USDC. And in this case, we're talking about the FV Bank. Now, the FV Bank is a very crypto-friendly bank. It's regulated by the Office of the Commissioner of Financial Institutions in Puerto Rico. So, U.S. territory, which is cool. I say that because FV Bank made an announcement today that they were allowing customers to make deposits in USDC. Their announcement was that of the launch of this new service where account holders can make direct deposits in USDC to the bank's US dollar accounts. That means customers can now receive USDC directly to their accounts, just like it came from the automated clearinghouse or like it was wired funds, which makes total sense. It's a $1 stablecoin. So this means any funds received in USDC are automatically converted to good old USD at the time of deposit. This works internationally. So this means that FV Bank users can send invoices to their international customers in USDC. That's like instant cheap transfers, especially when you throw the conversion rate in there as well. Miles Paschini is FV Bank's CEO. He said, quote, "We believe this feature will greatly enhance the user experience and open up more frictionless commerce." He pointed out that USDC is the first stablecoin accepted for deposit into USD. In fact, they're the only ones, though they might consider some other stablecoins in the future. And why not? The benefits are huge. Pascini said, quote, "We have chosen USDC due to its licensing, reserve attestations, and the real-time one-to-one liquidity." In other news, FV Bank plans to launch their own custody service. This would let customers hold their digital assets in a wallet alongside their depository accounts. This isn't for stablecoins. This is for major cryptos like Bitcoin and Ethereum. Quote, "Based upon our supported assets criteria." And FV Bank is not the only one planning on integrating USDC. Yesterday, Robinhood also announced that they were listing USDC. And further, USDC will become available on the Polygon and Ethereum networks on Wednesday. That said, not everybody is a fan of USDC these days. Binance and WazirX both announced that they were suspending trading of USDC. They're doing something similar. However, any incoming USDC will be auto-converted to BUSD. And then when BUSD is transferred out, then you have the option to send it as USDC. And some people are still concerned that USDC did freeze about 75,000 USDC on Tornado Cash as a response to Treasury's actions. And apparently, they weren't even asked to do so. They just froze the funds of their own volition. So it would seem to me like more attention is being paid to the stablecoin digital dollar CDBC part of the electronic space. I think this is a good and needed conversation to have. So much depends on getting this right. With the failure of the Terra stablecoin, we've seen what happens if it goes wrong. I want to thank you, my listeners, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.